Hey everyone, it's January 2026. Wages are up a bit, unemployment's lowish, but at least most Americans how they feel financially, and they will say poorer, groceries, rent, gas, everything costs more. Even if your paycheck looks bigger, there is inflation at work. Right now, the official CPI inflation rate is 2.7% for the 12 months ending December 2025. Not crazy high like 2022 is 99%, but still quickly chipping away at your money every single day. Today, we are exposing how inflation is secretly making you poorer, the math behind it, and why it feels worse than the headlines say, who gets it hardest, and the simplest moves to protect yourself in 2026. If your dollars are not going as far as they used to, this video is for you. Stick till the end. I have got a realistic anti-inflation plan you can start this week. Let's break it down. Firstly, we discuss what inflation really is. Inflation is not just prices going up, it is a loss of purchasing power over time. Your $100 today buys less tomorrow. The Fed target 2% sounds tame, but at 2%, your money loses half its value in 35 years. At 3%, it is 24 years. We have averaged closer to 3% long term, and spikes like 2021 to 2022 accelerated the damage. How it is measured? CPI tracks a basket of goods or services found food, housing, gas, medical, etc. Latest BLS data 2.7% YoY to December 2025 or at 2.6% monthly up 0.3% driven by shelter and food. But CPI understates for many your personal inflation might be higher if rent or food or gas eat more of your budget. We discuss the hidden ways it erodes wealth. Here is the inflation secretly hurts. Number 1. Wages lag prices. Even if pay rises 4% but inflation is 3%, real gains only 1%. BLS real average hourly earning of 1.1%. YoY to December 2025 better, but since 2022 inflation adjusted wages are roughly flat overall. You work harder for the same stuff. Number 2. Savings melt. National average saving APY 0.62%, bank rate January 2018. High yields 4 to 5% according to LA or SOFI. At 2.7% inflation, average saving lost 2% real value yearly. 10,000 in a 0.62% account after inflation real value drops $200 per year. Number 3. Debt illusion. Fixed rate debt, old mortgage gets cheaper over time, but new debt or variable like credit cards in which you have to pay 20% plus gets brutal. Payments feel heavier as income buys less. Number 4. Assets gap. Stocks, real estate often beat inflation long term. Cashes or bonds lag. If you are not invested, inflation taxes your wealth silently. We discuss why it hits average people hardest. Inflation is not equal opportunity. It is regressive, it's lower or middle income hardest. Poorer households spend more percentage on necessities like food, shelter, gas or energy. Rich spend on luxuries or investments that rise slower or appreciate. Studies shows inflation acts as a silent tax on the poor or working class. Low wealth folks miss asset gains in high inflation widens inequality. Rich get richer via assets, poor see real income or savings shrink. In 2026, with shelter, food still sticky, many feel cheaper products rise faster, like squeezing budgets more. Now we discuss real 2026 examples and math. Let's math it out. Example number 1. 50,000 salary in 2025, 3% raise is equal to 51,500 but 2.7% inflation, real gain 300 to $500. Groceries up 3% plus rent 3 to 5% in many cities feels like no raise. Example number 2. 10,000 emergency funds in every savings like 0.2%, inflation 2.7%, real loss $207 per year. In high yield 4 to 5% real gain, 180 still positive but barely. Example number 3, $3,000 house budget in 2022, value up, mortgage fixed, inflation helps. But new buyers face higher prices or rates locked out. Compounding at 3% inflation, $1,000 today needs $180,000 in 20 years for same purchasing power. Without growth investments, you fall behind. The big losers versus winners. Losers are those are cash holders, fixed income retirees, minimum wage workers, high debt folks without assets, and the winners are homeowners. That equity grows, stock investors, businesses, debtors with fixed low rate loans, and middle class. Mixed wages catch up slowly, but lifestyle costs rise faster. Many feel stagnant despite stat. Now we discuss how to fight back your 2026 action plan. You can't stop inflation, but you can beat it. Number one, boost earnings. Negotiate raises, side hustles, extra $500 per month investor compounds huge. Number two, invest the gap. Max 401k match, Roth IRA, low cost index funds, aim to beat inflation plus taxes. Number three, high yield everything. More savings to 4 to 5% APY accounts, pay high interest steps aggressively. Number 4, budget smart. Track with YNAB or Mint, cut subscriptions, buy generics, negotiate bills. Number 5, protect purchasing power. Buy assets like stocks, real estate if possible, learn via books like Psychology of Money or Creators. Start small, auto transfer $1 per month to index fund today. Inflation at 2.7% in 2026 is not headline grabbing, but it is secretly eroding your wealth through lagging wages, melting savings, and uneven impacts. You are not imagining it, but you can fight back. Invest, earn more, protect cash. If this open your eyes, like, subscribe, notification on. Next best investments to beat inflation in 2026. What is your biggest pain point? Groceries, rent, savings are your first inflation move. I read everyone. Don't let inflation win. Take control today. See you next time.